If you've been watching our market reports, you've been seeing our inventory of homes gradually increase over the last couple months. It is still increasing, however, at a slower rate than what we've previously seen. The good news is the inventory that's on the market, well, it's not a surge of sellers coming to the market. It's just the effect of high interest rates affecting affordability for the buyers, taking some of the buyers out of the market. I don't think we've seen the top yet. I think we're going to see inventory continue to increase until the end of October, beginning in November. Around that time, typically sellers tend to take their houses off the market and then usually wait till spring. So I do expect inventory to come back down. Well, what's this year look like? It's looking like it's going to end exactly as last year it is. If you remember last year, we talked about the tale of two different markets. First 6 months of the market and the last 6 months of the market. Well, this year at a much less extreme than what we saw last year, but seems to be the same way. Tale of two markets where the first 6 months, still the buyers were bullish, even with interest rates. The last 6 months, we're starting to see buyers pull back, and I expect to see that throughout the end of the year. My name is Jeremy Williams with the Bannack Real Estate Group, and each month we try to bring you hyper-local information based on real data so you can make decisions and know what's going on in the market before the rest of the market catches up. It's going to give you an opportunity and edge, so whether you're looking to buy or sell a house now or in the future, you're going to be better prepared to know exactly what's going on and make the best decisions for you. So with that, let's get into it. So let's start by looking at where the market is today compared to last month. Well, over the last 30 days, we've seen 82 more homes go under contract, which is about normal this time of the year. There's 244 homes for sale actively on the market. That's a little bit of an uptick than what we've seen. However, again, that's a slower uptick than what we saw previous months where we saw a lot of inventory come to the market. And it's not because there's a flood of sellers, it's just because some homes are staying on the market a little bit longer than they were previous to the last couple months. And then last month we saw 74 home sales. Just to put that in comparison, same month in 2022, that's about 8 more than we saw last year. So if you remember last year, we saw a big change when rates started going up around August and really slowed down our market towards the end of the year. Part of that seasonality too. I do expect the next couple of years to be more of a normal market where our market traditionally slows down in the wintertime and gets ramped up in the springtime. So I do expect inventory to go up over the next couple months. Well, at least the next month, and then it's probably going to drop off. Homes that stay on the market tend to be more motivated sellers. It could be a great time for someone to capture a good deal on a property or be able to have a little bit more negotiating power when purchasing that property, which really makes a difference with the high rates. Maybe we can negotiate some rate buy downs or something in inspection items or whatnot. So that's what we're paying attention to. The big indication is, because it seems like this market is really ending the same way last year did, where we didn't know what to expect heading into spring. Well, this spring the buyers showed up. They were bullish about purchasing properties, which gave us a big encouraging insight into what the health of the market. Well, come around February, March, April next year, that's going to be the difference. If that happens, we're going to be in good shape. If the market stays slow, that I expect to see this winter, well, that's going to mean that the high interest rates are putting more pressure on the housing market, and I do expect at that time to start seeing prices go down. Of course, at this point, we're still seeing 4 to 6% appreciation compared to last year. So homes are still going up, but if that continues, if the buyers don't show up, and the sellers don't adjust, I do expect to see some of those prices come down. So let's look at some of the key indicators that we're watching for how the market compares to last year and what we can expect moving forward. One of the biggest things that I noticed is that our list of sales price for the first time in 5 months was under 100%. So it was 98% last month. In a normal market, I would expect 96 to 98% list the sales price. So that seems to be normalizing a little bit. It certainly plays into what we're talking about when we head into these winter months and how sellers tend to be a little bit more negotiable. I expect that to continue through the winter. If it makes any big changes, gets down towards 90 or less, well, then we really have to pay attention to that, because that might be a bigger indication of a market change or changing more dramatically than what we're currently seeing in the data. So one of the things I just want to look at is in 2022, October, there was 206 homes for sale. Currently, there's 244 homes for sale. So we've seen a little bit of an uptick, nothing major, but certainly something we're just watching to make sure it doesn't get out of hand. To put that in perspective, when we look at absorption rates, if you remember, absorption rate is supply and demand. I measure it in months. So 6 months of inventory is a normal market. Over 6 months is a buyer's market. Under 6 months is a seller's market. So with that inventory last year, we had 2.3 months of inventory, extreme seller's market. Well, now we have 3.3 months of inventory, and that's still considered a pretty dramatic seller's market. We would literally have to bring hundreds of homes, 200 to 300 homes for sale immediately to even get that to a normal market, let alone a buyer's market. However, we are seeing some changes. So in certain markets, certain market segments are a little bit slower than others. And I'll give you an example of what I mean. If you look at the price ranges, I usually break them down by $50,000 increments. There are more houses under contract from $650,000 to $700,000 than there is from $700,000 to $900,000. So that $700,000 to $900,000 has just been a little bit slower. It's kind of an in-between zone between the newer buyers or the more affordable housing, and then the buyers that are up in the $1 million range and sometimes have more options. So those tend to be the bigger markets, the top and the bottom. The middle's still doing well, but it's a little bit slower than what we've seen. And again, if you've been watching the videos, we've been watching that all year from the top down, where it's slowly been getting down and pushing buyers out of that range. Of course, interest rates probably affect that zone more than anybody else. As far as number of solds, last year we saw 101 sales this month. This year we saw 74, so a little bit less than we saw last time. Here's an interesting fact. Our list price, our average list price last year was $807. This year was $718. What we've been finding is a little more affordable houses have been coming on the market. This kind of brought that down a little bit. I think people are getting a little more realistic to what their house might be worth in today's market. And then last, the pendants. Last year at this time we had 69 pendants. Right now we have 153 pendants, and that seems like a dramatic increase. But one thing that we're watching, and I know we see this in the data, is last year homes would sell very quick. 30 days and less sometimes. So they'd be on and off the market. This year, especially because a lot of people are having to get into new construction because of low inventory, those under contracts are showing for a longer period of time before they come out. So they're stacking up. And we see this when we track the new pendants compared to the number of sales. So we know it's just people, more houses staying pendant for a longer period of time. So that's something we're going to watch just to see what happens with those pendants as we head into the new year. So what does this all mean? Well, if you're a buyer, let's be honest. We are seeing changes in the market, but homes are still going up in value. If you're looking at a $500,000 house now, you might be looking at a $525,000, $530,000 house next year for that same property. That makes a difference. I was talking to a lender recently who said, date the rate, marry the house. You can get in at a good price now for the house, and then over time, hopefully we can get you refinanced and get those rates down. We also have tools that we've been using to help buyers get in at lower rates and different ways that we've been able to negotiate that. And then we work together with the lenders to be able to make that happen. So if you're looking for a house, you're considering home ownership over the next couple months, it's important to ask questions. You don't want to look back and wish you did something different. And of course, if you're a home seller, well, there's certainly opportunities. Low inventory, low competition, and we're still getting great prices for houses. So if you have any questions, whether you're thinking about buying a house now or selling a house now or in the future, it's good to just reach out. Make sure you're thinking about things the right way and strategizing properly. You can, of course, reach me on my cell at any time. You can reach me at 406-531-1519, and we look forward to talking to you soon.